HOTMA, and he is here to educate us, and so that you feel empowered to work with your local housing authority on implementing some of these changes. So I am going to hand it over to Mac, and he is going to lead us through a PowerPoint presentation. And as I said before, chat is an option for questions and answers. And at the end of the presentation, we'll also have dedicated time for questions and answers. So for now, just mute yourself and listen in, and that's it. So Mac, it is you while I put on the, yep, you are on.
Okay, great. Thank you very much, Maria.
Mhm.
So, good afternoon, everyone. Glad to see people from so many different parts of the state that may have issues with HOTMA. And so, what we're going to cover today is some basic information. First, what is HOTMA? HOTMA stands, and I'm going to talk about what it stands for in a moment. There are a few acronyms that I'm going to use throughout this, and I just want to explain them because some of you may say, hey, that's not what I'm used to. And so, for example, HUD tends to use the phrase PHA, or Public Housing Agency or Authority, whereas those who work a lot with state public housing, with the Executive Office of Housing and Livable Communities, formerly known as DHCD, use the term local housing authorities, or LHAs. So I'm going to be using the HUD terms a lot today, but it just means your basic housing authority. We're going to be going through how this affects you, these changes in terms of your rent and how your income is calculated. We're going to be going through some HUD worksheets for a quick deeper dive so you can see how these various changes play out when you would get called in for recertification, or when you yourself may find it's in your interest to contact the housing authority and say, hey, something needs to happen. Then there are going to be some choices that housing authorities can make about better or worse policy choices, because even though HUD says a lot of things about what housing authorities have to do, not everything is dictated by HUD. There are some areas where there are choices given by housing authorities, and some of those choices could be better for tenants than others. So we're going to talk about what you may want to do in trying to influence what your local housing authority does. Then we're going to be talking about some general questions and answers. Just to be clear, HOTMA does not affect state public housing or state rental assistance programs like the Mass Rental Voucher Program or the Alternative Housing Voucher Program. It does affect federal public housing, and it does affect the Section 8 program. So I know some of you may be in developments that are switching from being federal public housing to being Section 8. HOTMA affects both of those programs. And one thing we're not going to discuss today, because it's sort of its own topic, is there are some other things that were done with HOTMA, like there was an over-income rule for federal public housing, but we're not going to get into that today. Main reason is that it was done last year, and so there's not a lot we can do to influence that. So, Maria, if you could go to the next slide, please. So, HOTMA, what is it? What the heck is it? So, HOTMA stands for the Housing Opportunity and Modernization Act. I know when I was talking about this to the Resident Advisory Board in Boston, they at one point thought it said Hot Mama. I said, no, it's just HOTMA. And it was passed as bipartisan legislation in 2016, and it was signed into law by President Obama. And while HUD did some things in 2016 and 2017 to bring certain parts of it into effect, a lot of it didn't take effect until very recently.
We're on camera. We're on camera. Oh,
If someone could be muted there, that would be good. That's okay. And so very recently, HUD issued a final rule about the rent and income parts of HOTMA. Oh, one thing I wanted to mention was this isn't the first time Mass Union's heard about HOTMA. We had, I remember being out at your fall convention in 2019 out in Norwood, and we talked about it there. And actually, Mass Union asked for Greater Boston Legal Services to do comments about HOTMA then, because we were trying to influence what HUD did. And HUD listened to some things and they didn't listen to some other things. That's kind of par for the course for HUD. And now HUD issued a final rule on rent and income. Some parts of that took effect on January 1st of this year, and other parts are going to be rolled into effect by housing authorities over the course of this year. So you're likely going to be hearing a lot from your housing authorities over the course of this year about, oh, we have to do this because of HOTMA, or we have to do that because of HOTMA. That's all what we're going to be talking about today. Next slide, please. So here are some big changes with HOTMA. So the biggest one I think that many households are going to see is the difference about what's called extraordinary medical expenses. So right now, if you're what's called an elderly household or a disabled household, that is one in which the head of the household or the spouse or it is either a person who's 62 years of age or is a person with a disability, you can get a deduction of medical and other expenses in excess of 3% of your income. So you'd go in, like if you're having to pay out of pockets for insurance premiums, if you've got your co-pays, if you've got ambulance bills, if you've got prescription drug costs, if you've got costs for your glasses or for shoes or things like that. Those are all things you can sort of put together in a sheet for the housing authority each year and say, well, if it's above 3% of my income, I get to deduct what's above the 3%. That's changing. So for anybody new coming into the programs, it's going to be for what's above 10%. So it means that a lot fewer of these expenses are going to be countable as a deduction. And HUD realized that this was going to be a hardship for people that were already on the program, that were used to the 3% deduction. And so they're going to phase it in over 2 years. So the first year that they do it as part of your research, which may be later this year when your research are done, they're going to change it to 5%. Then the following year, it'll be 7.5%. And then finally, it will get up to the 10% for everybody. If you were new, though, moving in, they'd use that 10% figure right away. A second big change is what's called the elimination of the Earned Income Disregard, or EID. Not everybody knew about this program, but it was a big deal in federal public housing. And I know I've used it a lot working with residents at different sites. Because what it would say is if you were going from either being on, let's say, public assistance like TAFDC, or you might have been on, long time on unemployment, 12 months or more, or really low wages, and then you got a job. What that said was that for a 2-year period of time, you can transition to the higher rent that you would be faced with because of your employment, where they would not count the increase in your income at all for 12 months, and they would only count 50% of the increase in your income for the second 12 months. That's been eliminated as of January 1st of this year. Now, there are some households that were already on that before January 1st, who then can continue to get the benefit of whatever their disregard period was. But anybody new would not be able to get it. So let's say that I went and I recertified at my housing authority last June. And last June they said, oh, you were on TAFDC, you got a job, your job is paying you a lot more than you were getting on TAFDC, and we're just going to count it basically like your rent was still on your TAFDC level until June of next year. And then June of next year, we're going to count half of that increase in your employment income above, above the TAFDC amount. Well, I would still get the benefit of that because I was already on that this coming year. But if I wasn't in that queue, if the housing authority hadn't identified me as being in that grouping before January 1, I wouldn't be able to claim this after that. We'll get to a little bit later why HUD says, oh, we're still trying to do something good for you, but it's not quite the same. Then the other thing is that they changed the standard deductions for elderly disabled families. So this one's a good one. They changed it from $400 a year to $525 a year as a standard deduction. They've left the standard deduction for your dependents at $480 a year, but for both of these, they're going to be adjusting these periodically for inflation. We don't know how much they're going to go up yet, but they're supposed to revisit how much they change due to inflation. So next slide, please. Then the other HOTMA changes, and this begins to get into the intersection with that earned income disregard issue, was that instead of having housing authorities be all over the map about what their interim recertification policies are, like when do you have to report changes in income and when could your rent go up in the middle of the year because your income increased, they've kind of standardized that. And so what they've said is that if your income goes up by 10% or more from what it previously was listed, then that's going to be something that you should report in between. But you don't have to report that if it's just increases in your earned income. And the only exception to that would be if you had some prior reduction, like, you had a job, you lost a job, you said, decrease my rent because I lost a job. Then if you got a job again, then you might have to go in. But other than that, you would not have to report an increase in your income due to employment. You would have to report other types of increases in your income. Say, for example, let's say somebody in your household hadn't gotten Social Security before, and they're starting to get Social Security now. You would need to report that sort of thing. Another change that they're doing is that you have the option of doing sort of cost of living types of increases annually and to do your recertifications like every 3 years rather than every year. If 90% of your income or more is what's called fixed income. So fixed income, obviously, Social Security disability income or SSI, TAFDC, EAEDC, and also annuities or pensions. Those sorts of things are considered to be fixed income because they don't change that much, or if they change, they're kind of a standard change that they happen each year. And so requiring both you and the housing authority to go through this, painful exercise of doing all this recertification, HUD figured, why do that if it's basically most of your income is fixed, and we'll just figure out what the cost of living increase is. If Social Security tells us that the grant has gone up like 1.5%, then that's how much we'd increase your rent by, or count as being what your income had gone up by, and then we'd figure out your new rent. Doesn't mean your rent doesn't change each year. Your rent could change, but your rent would change matched to this cost of living increase rather than having to go through a whole process. The other thing is housing authorities have to adjust your rent downward if your income decreases by 10%, and the housing authority could have a lower threshold if they wanted. So this is one of the areas where you might want to push your housing authorities to get you a more generous ability to get your rent knocked down if your income went down by less than 10%. Like say to the housing authority, let's have the trigger be 5% rather than 10%. And HUD also requires that there has to be a downward adjustment whenever there's any income loss due to a reduced household size. Like, your son was living there, but he's now moved out. And so that's something you have to report that right away when it happens. But then if your son had income coming in and you don't have that income coming in, then they have to adjust that right away, whether it meets that 10% guideline or not. They're just supposed to sort of adjust it because there's been a change in the household. And they've eliminated some recertification requirements for smaller assets, but they've also allowed there to be an asset cap. So this is a new thing for federal public housing. So if you have assets that are more than $100,000 and you were trying to apply for federal public housing, you could be denied. Now, not all things count as assets, and so there's a whole long list of things that might not count as assets. And also there are some things that are counted as necessary personal items that aren't supposed to be counted as assets, like a car, for example, that might be necessary for your getting to work or that sort of thing. On the other hand, if you had a fancy car collection, that would be different. They could count your fancy car collection toward what your assets might be. And they are allowing housing authorities to do what they call self-certification. So you may remember there have been these, if you've gone through recertification, oftentimes it's really burdensome, all the paperwork you have to turn in about how much is in this bank account, how much is in that bank account, how much is this insurance account that they've got on you worth, if you were to take it as a lump sum or something like that. And they allow you to self-certify for amounts that are below $50,000 on that. So you can just say, this is how much it is, and you don't have to bring in all the extra paperwork. Next slide, please. So HOTMA is oftentimes referred to as simplification. So that was the big selling point that a lot of the industry made about why they needed this bill, was to simplify the process. And there are some things that I've talked about that are sort of simpler because they're saying all housing authorities would have the same rules in this particular area. But I think you're going to find out that there's a lot of stuff that just looks more complicated. It's like, no surprise. We often find that this is the case whenever either HUD or the state agency gets involved. And because one of the things is it's going to use projected income. So they're going to look at what was your income that was coming in on your tax returns or your W-2s and so forth, and just say, okay, well, that's going to be your projected income for the new year. And so housing authorities can go ahead and do that. And that may not, in fact, be a good or accurate picture of your circumstance. And I know a lot of residents over time have complained to me about issues that they have with fluctuating income. 1 month your income's this, but then the next month it's not that because you don't have the same hours, or you picked up holiday pay and you don't have holiday pay coming in, and so what you get can fluctuate a lot. And unfortunately, with this 10% rule, some housing authorities might be able to say, well, I'm sorry, you've told me about your change in income, but unless it gets beyond a certain amount, I'm just going to leave this alone. So that can make people's life more complicated. And so I know when we get toward the end of this, one of the questions we've got in the evaluation is talking about effective ways to act collectively, because I think over time, as housing authorities roll this stuff out, there are going to be problems. There are going to be problems that people will run into with different things that housing authorities are doing. And some of those are going to be unique to particular housing authorities and particular people at particular housing authorities. And some of them are going to be bigger problems perhaps HUD has caused that maybe we can get HUD or the HUD regional office to do something about, and where Mass Union acting collectively might be able to influence some of those actions. So I think having a good network that sort of stays in touch with what's going on in different parts of the state is going to be really important. So next slide, please. So this is the part where we could either spend a lot of time or a little time, and I'm going to try to spend a medium amount of time on things that are in HUD's worksheets. Because at first, when I was planning for this workshop, I was saying, oh darn, HUD really doesn't have anything that seems to be well designed for residents to talk through this stuff. It's all, they've written all this stuff for housing authority directors and, consultants and people like those, and not your average resident. Fortunately, they have come out with a few things that are a little bit more resident friendly, and that's what these worksheets are. And so I thought that they were useful for you to have them in your material and for us to go through them. But we're not going to be doing a real deep dive. Particularly, I know for individuals, there may be questions that come up. And so I saw somebody ask a question about, would this apply if you get stipends too? And the answer is the existing HUD stipend rules will apply there. So if you get less than $200 a month, that's not countable. But if you get stipends above $200 a month, the amount that's above $200 a month is countable. So why don't we move to that first worksheet that's about the general review of income, if that's okay. And I know I've been breezing through and I may not have been catching things that were in the chat. So I don't know if, Maria, you should tell me if it would be appropriate for us to pick up anything from the chat at this point, or just to keep going with the worksheets.
Sarah, was there anything in the chat that?
Yeah, there's a quick a question about the car. If it has to be necessary for getting to work in order to be exempt from assets.
What I will say is I would recommend when we get to that worksheet that people take a good look at that worksheet, because I cannot remember enough off the top of my head. There are a number of things. HUD is fairly liberal about what they count as being, necessary household items. So I think it wouldn't necessarily have to be tied to work. I think as long as it's tied in some way to your daily life, that would be fine. That's why I was making the distinction between a car for your family use and a car that's a collection, because those are really different things. Was there another one, Sarah?
Nope, just some comments about how LHA should be presenting this clearly to folks. And I also just want to mention that we will be sending the slides around, so don't feel like you have to write everything down. And also, if I can't tell what your name is in your square, if you wouldn't mind either changing it or texting me your name so we can have an accurate attendance, please. Thank you very much. Okay. Sorry, go forth.
So we'll move to the first worksheet.
You got it. 1 second.
Great, thank you.
Right. Can you see that, Matt?
Sure. Yep, I can. So this is a worksheet that HUD has done about general income calculation and reviews. And so they're talking about that there are new rules in which the way income is calculated. But one thing to keep in mind is it's still the basic formula that HUD has of its 30% of adjusted income. There's still the same idea about that you could have a flat rent if, the housing authority's flat rent was below 30% of your income. You could opt to have your rent be set at that flat rent. And then if your income decreases substantially, you could say, oh, I no longer want to be on the flat rent. I want to go back to having an income-based rent. That part is still all pretty much the same. And then HUD gives a list of things that are generally considered to be countable income and not countable income. So they talk about earned income, which includes things from wages, salaries, tips, or other payments, money you get as a day laborer, and then examples of things that are unearned income for any house family member are government benefits, um, any money you get regularly from a pension or annuity, child support, or income from assets such as stocks or bonds or financial investments. So that's where I was making the distinction before about if your income goes up by 10% or more for unearned income, you have to report that mid-year. But if it's for earned income, you don't have to report it in most circumstances. So I'm going to move to the next page. Scroll down a bit. Yep, sorry. And then in general, this is a list of what's excluded from income. So, and HUD has a whole other slide on this, which I'm not going to get into because I know we get really in the weeds if we did that one. But the examples they give is like if it's one-time job or temporary employment, that wouldn't be counted because that's sporadic. That your tax refunds aren't counted. That gifts that you get on special occasions like holidays or birthdays aren't counted. Donations that you get, such as food, clothing, or toiletries from a food bank or similar organizations, aren't counted. Certain payments that help people with disabilities live at home, and certain types of financial aid or money for school. But we're going to talk a little bit more about the financial aid part because there's a whole separate slide on that. And then this gives you that link to that other longer piece, which gives you all the exclusions. And the other thing is if you pay for childcare or you have the medical expenses, there are extra deductions associated with that. And that's also a separate worksheet. And it was a little bit what I was talking about before about that 3% going to 10% for the extraordinary medical expenses. So moving on down on the interim reviews, this is what we talked about before about if your income goes up by more than 10%, you might have to do an interim review. And again, that's going to depend on whether or not it's earned income or unearned income, or whether or not you basically got some rent downward adjustment before, and now the earned income is going to be counted because you basically weren't counting any earned income before. One thing that's important here is to talk about reporting things as soon as they occur. I think that's generally a good rule. If you report and you didn't have to, then nothing bad happens to you from that. The housing authority simply would come to the conclusion, it's not going to change the person's rent. Thank you for telling us, but that's that. The one that's really important, though, is downward decreases, because if you don't report a downward decrease right away, you can then get stuck with paying more rent than you might have had to. And the housing authority might say to you, sorry, if you had told us about this 3 months ago when you had that income decline, we could have done something about it. But all we can do now is give it to you now, but we can't give it to you back for those 3 months when you didn't tell us. And similarly, if it was something that you actually were required to report and you didn't, I know you've probably all encountered those situations where the housing authorities have then tried to do a retroactive increase. And they suddenly say to you, oh, not only is your rent going up for May, but you should have told us this back in January, and so we're increasing your rent retroactive to February. That is still true. It is still a possible thing that can happen to you through this. And that's why I think it's generally a good rule of thumb to let them know. And then if it turns out that you didn't need to, fine. And if it turns out that you did need to, because you told them on time, then the burden becomes on them to make the rent change prospective for any increases and give you the normal kind of advanced rent increase notice. Let me move to the next one. Right, so this is the interim review one, and this is sort of a longer version of what we just went through. And this goes through what I talked about before about the household changes. You need to let them know about those right away, regardless. That's not the, oh, you can wait until your annual. You need to let them know about those right away. And I know sometimes that gets burdensome because housing authorities may say, oh, well, where'd your son go to? What proof do you have that he's at X, Y, or Z address? And so you can have those problems, as well as you could have the issues where you're adding someone and they're requiring you to bring in extra paperwork like Social Security cards or other documents or birth certificates or other things for people. And in some cases where it's not a minor, having to go through an approval process. I'm not going to go through all the details on that because I know that varies a lot by housing authority, but it's just really important to tell them right away about household changes. And then we talked a little bit about the differences between what has to be reported on an interim basis, like the 10% increase in your unearned income, in circumstances where you might not have to have any change because it's earned income. And one value of this worksheet, if you scroll down, it actually has some worksheets at the end and gives you some examples of sort of how you can plug in your income. So you can say, okay, here's what and it says yes, no, and it's got basically here's what you do and ask yourself these questions, and it gives a way to add together what were you getting before, what were you getting later, does it cross that 10% threshold or not? Or if your housing authority has a lower threshold, you'd look at that lower threshold to see, did the housing authority need to adjust my rent, or was I good? Did nothing need to happen? Or, on the other hand, if you wanted it to happen, should they have changed it? And they didn't, but they were wrong under their policies. So let me move to the next slide, but I know there might be questions on these as we're going along. Okay.
Yep. Did you guys see Parmi had 2 questions about 10% of annual income or monthly?
Yeah, so the way that they would do it is they would project annually. So the house, let's assume that you had a drop in your income for that month, but it didn't amount to being a 10% a decrease for what was projected annually. The housing authority could say, for example, oh, your income went down, but it wasn't enough to amount to a 10% drop if you projected it annually. And contrary, and in the other direction if it's an increase. So that's the way it works.
That, I think she has a follow-up question. If it's a one-time job, that it's still the same. You just have to look at it in the context of your annual income, it sounds like.
I think that's right. And when HUD gave that exception in there about short-term job, I think they were talking about really like sporadic income. And so that one that one's going to be a judgment call because different housing authorities have different cuts about what they think falls within sporadic and not. And that might be a fight you'd have to have at your particular housing authority. So this one is the worksheet around the elderly disabled and childcare deductions. This one's a little more complicated, and I'm not going to get into all the weeds on this, but one of the things that HUD has put into this and is in the policy is that if, for example, you would face a hardship because of the immediate implementation of a changed policy, you might not be able to cover your rent because of that. You might be able to ask for some temporary hardship exclusions or exemptions. So the example that they give is, let's say that it's a new person applying for the program. And in the old days, you would have used 3%, but now you're going to use 10% for that person for their medical expenses. And they can show, oh, I'm really not going to be able to pay my rent if that happens. There is some discretion to be able to do 5%, what you normally would have done for an existing family that was getting phased in as the deduction. But it's only given to you in chunks of time, like 90-day periods. But housing authorities are free to grant other extensions if it's in their policy. So this is another area where you'd say, gee, housing authority, I work with you. You're supposed to be friendly to us tenants. A way to be friendly to us tenants is to give us these exemptions because these are going to happen to us. And another one they have, which, you wouldn't have expected it, but it's actually interesting that it's in this, is about childcare expenses. So sometimes you can have situations where somebody was getting the childcare deduction because they were working or because they were in school or they're looking for work. But there might be some time period where none of those things quite fit, but you're still having regular childcare expenses. An example I can think of is someone's lost work and they're getting unemployment, or someone has had an injury or an illness that means they can't engage in work right now and can't engage in school right now, but they still have ongoing childcare expenses. HUD has added that as another hardship situation that again can be given to people in limited chunks. And then the housing authorities have some ability to grant extensions of that time period. So again, same idea there. There's greater details in this worksheet about all of that, which I'm not going to cover in greater detail than what I've just said. So I'll move on to the next one. So this is one, and actually HUD did a fairly recent, more detailed training on this, which we can give you the link for if you're somebody who loves to listen to HUD trainings about real estate and asset limitations. So there are two separate ones here. So if you have real estate that you own that would be suitable for you to possibly live in, then that too might, just like the asset limitation of $100,000, might be a reason you might not get housing. But they have all kinds of different exclusions about when it's not suitable. For example, where you're sharing it with family members, or where it's really being already used by some other family member, or maybe you're a co-owner, but it's just you have this co-ownership interest. It's not a real interest. So there are lots and lots of ways in which they describe ways of excluding it. Another example is they exclude domestic violence. So let's assume that a woman had to flee her home to be a survivor because there was an abusive spouse, and her name is still on a deed somewhere in another part of the country. HUD recognizes that that's not something where she's going to be able to safely do anything with regard to that property. And so that's another exclusion. And then the assets discussion goes in excruciating detail about what kinds of assets might not be counted within this $100,000 limitation. And more of the detail in here about the necessary items and so forth is covered. So again, if any of you either yourselves or are working with residents that have issues where they run afoul of this with the housing authority periodically, it's worth looking at this. I know there's been some litigation in this area. There were special needs accounts that got litigated with the Brookline Housing Authority a few years back. I'm not going to get into any detail on this because it doesn't apply to everybody, but it certainly is worth looking at if you've got something in that area. And then finally, the last worksheet we have has to do with student financial aid and talks about certain types of student financial aid that's not counted at all, and certain other types of student financial aid that might get counted if there's an amount that's beyond what your actual costs are for your particular expenses. And again, I'm not going to get into this in any detail, but if any of you, either in your families or residents you're working with, have these issues, it's worth looking at this to see, how they should be treating this. I don't think this has changed that much from what the existing rules were, but it certainly has helped clarify some things that I think were a little bit murky before with some housing providers. So I'm going to stop there on the worksheets, but again, I would recommend using these as you're thinking about your own situations, or if you're working with residents, if particular questions come up. And we're going to switch back to the slides again.
Sarah, are there any questions before we go to the slides?
Yeah, we had a question about utilities.
Yes.
Okay.
Yeah, go ahead about that. Does it
Sure,
says
okay. So this does not change general rules about utilities and utility allowances in federal public housing. So for federal public housing, unlike state public housing, there's that standard 30% of income rule, and that's for basically the you're not paying more than 30% of your income for the combination of the tenant portion of the contract rent and what the tenants are paying toward utilities, that is gas, electric, oil, if that's part of what's being paid. And then that gets calculated using regular utility allowances for federal public housing. Not all federal public housing authorities are good about staying on top of utility allowances or adjusting them. Mass Union was on the cutting edge of this work many, many years ago, and I think is still on the cutting edge of this work in trying to get HUD to do the right thing. There's some individualized relief that people can get around utility allowances if they're not sufficient and so forth. But the basic rules are still the same. And so HOTMA really didn't change anything about utilities and how those should get factored in to your federal public housing rents. For Section 8, it is more complicated on the utility side, but I'm going to hold on any Section 8 questions because I don't think that's this audience.
No, and in fact, how many people here actually live in federal housing? If we could just see a quick show of hands, because just out of curiosity. Yes. Okay, great. Thank you.
Wait.
Who's wait?
I'm trying to change my video and it won't. Okay.
Oh, hi, Parmi.
It's me.
Okay, Parmi, if you don't mind, I'm going to go through a few other questions and come back. But about the timing, Mac, does any of, well, this is your Parmi's question. Does any of this go into effect now, or is it all FY20? Is it all next year?
Okay, so yeah, that's a really good question, and that begins to get into some of the later slides that I have. So maybe I might put a hold on that until we get to those next set of slides.
Good. And then someone does want the link to that deep dive training on assets, I think it was.
Right. So I think I sent that out like 2 days ago as one of my emails to yourself and Maria. So it's not in what we've put in the package for today, but it would be easy enough to get to people.
All right. Put that out.
Sarah.
Yes.
He mentioned that he wasn't going to, the audience here. Am I part of this audience? I'm confused as to what my building is. He said he's not doing the Section 8. My building was changed over. Is
Mhm.
this a Section 8? I don't have a Section 8, but I'm, what is it, project based?
Project-based.
Because
Project
I'm
Gates
in
voucher.
charge.
Okay, so
Yeah.
project, and pardon me, where do you live?
Patricia White.
Patricia White
Okay, yeah,
Apartments.
okay. Then I can answer your question. For someone else, I
Oh.
couldn't answer that question, but for Patricia White, BHA includes utilities in your rent. And so basically everything I said before about the rent would be the same. So it wouldn't alter at Patricia White because BHA does not require residents to pay their utilities at Patricia White. There are some other sites though elsewhere in the Commonwealth where federal public housing tenants or even
Mhm.
or Section 8 tenants,
Mhm.
project-based voucher or otherwise, do have to pay their own utilities, and then it gets complicated depending on whether or not it's the voucher program or the PVV
Okay.
program. But for you, really straightforward.
No, my question isn't about utilities. My question was about the sheet that had the income calculation and reviews on it.
Yep,
It said that it's going to increase January 1, 2025.
yep.
But
So-
what
Sir,
if they're using some this year?
okay, so that gets to the timing question, which we haven't done the slide on yet.
Yeah, just hang on,
Okay,
Barbara.
all right.
All right.
Okay, thank you.
And then I just want to mention Veronica's question, which is, are there sample policies you'd recommend that we share with housing authorities, or is that not yet ready?
I think that isn't yet ready. I do think we're going to get into some of the questions where there are policies, and you can also look back at some of the fact sheets to unpack some others. But that gets into the next set of few slides. So if we don't mind going there.
Do the slides. Excellent.
Okay, so we've done the worksheets. So now here we're talking about tenants' ability to influence your HOTMA policy. And so as we said, a lot of this is dictated by HUD, but there are a lot of choices that you get to put into your local policies. And different housing authorities have different schedules under which they're doing this. So it may depend on what your schedule is for your housing authority on your public housing agency plan. For the Boston Housing Authority, which I'm most familiar with, I know they haven't yet done their HOTMA changes, except that they have eliminated the earned income disregard as of January 1 because HUD didn't give them any choice on that one. But the other things about changes to the lease, are they going to elect to do 10% decreases in income or something lower as a threshold? Will they give the exemptions for extending the hardship relief more than 90 days? Will they apply the asset cap to existing tenants so that it's on, existing tenants don't have to worry about the $100,000 cap? It's only for the new tenants. That's a big one. And so those are examples of things that all could be in the PHA plan that the housing authority rolls out and gives residents an opportunity to review and give comment on through a public hearing process and through notice and comment. And so each of your housing authorities has its own schedule that it usually does these on. Boston Housing Authority, for example, is an April 1 PHA, so they usually have their public hearings in the fall, and then they ship their stuff to HUD by January. There are others that might be like a July PHA or an October PHA, in which they have then their calendars work backwards from there. I have not yet heard of a lot of housing authorities doing their policy changes. Part of this is because HUD has been a little bit slow in its own tech measures on this, because HUD keeps saying, we're going to have a portal and it's going to have all this stuff and then you can access all X, Y, or Z. And HUD hasn't yet done those things. But one of the reasons we wanted to do this spring, both here and for the Mass Union Conference, is because we anticipate that this is going to begin perking out in different parts of the Commonwealth, and we didn't want tenants to be completely unprepared. And you can participate in the PHA plan process through your resident advisory boards, through your local tenant organizations, or as interested tenants if you want to affect the choices. So the housing authority should be notifying you about that. Housing authority is going to be changing its leases. It's going to be changing its admissions and continued occupancy policy. It's going to be changing its Section 8 administrative plans. And for all of those, they should also be giving you notice and comment opportunities through your recognized tenant organizations, if you have them, but also as affected residents who are affected by these things. Let me move to the next slide. So I know one of the questions we had, and I know it's both in this and I think it was also in the evaluation questions, is have any of you yet heard about your housing authority's plans to roll out HOTMA changes? Because I know what I hear in Boston or what we don't hear in Boston, but obviously there are over 200 housing authorities across the Commonwealth. And I don't know what may be happening in all the places that you have eyes and ears on.
Mhm.
Oh, go ahead, Mac.
No, that's fine. And I think at this point, we're kind of open for a general set of questions or comments that people may have on all of this, because it's partly like, okay, we've gotten some basic information, but where do we go from here with this, and what additional information would be helpful to us?
All right, well, let's go to Sally. I'm gonna go to folks who haven't yet asked a question, if you don't mind, and then we'll loop back to folks who can ask a second question, but let's start with Sally.
Okay, my question is about housing, health reductions. For example, a really big one is hearing aids. I'm talking $4,000. Is there any advantage to advise the housing authority that you want a hardship deduction, a temporary hardship deduction, or a health and medical expense deduction?
Okay, so what I would say is, if you're an existing tenant of the housing authority, so you're already there, you're already a tenant of theirs, they should be doing the change from the 3% to the 5% deduction at some point when they do the first recertification after they start implementing their HOTMA changes. So that could be later this year. If your normal cycle were to go in and meet with your housing authority, let's say in November, and by November the housing authority had those policies in effect, then they would start going through with you about what are all the expenses you have, what are your prescription drugs, what are your out-of-pockets, what are you paying for your insurance premiums, and then things like you mentioned the hearing aid. Some of those also are things that might get amortized, where you might want to sort of get the benefit over a number of years. So that's true for big ticket items, may also be true for like a wheelchair. So if somebody got a wheelchair, maybe it's very expensive, but the normal policy is we're going to let you like take 1/5 of that each year over 5 years and amortize it that way. Then they would figure out, okay, what is 5% of your total income? And then what are your medical expenses? To the extent that your medical expenses exceed that 5%, then you can do that. The hardship stuff that I was talking about is if you were new. So because otherwise, if you're new, they're going to apply that new 10% rule to you, which means there are far fewer of those expenses you're going to be able to really use as a deduction. But if you were a new person and you were saying, but I thought I was going to be able to get these deductions and so forth, then the housing authority could apply that hardship deduction to you. You might have to show them a few more things, like it was difficult for you to stay on top of your rent or your finances because of it. But that's all sort of laid out in that worksheet. It gives you some good ways to think about that in that worksheet.
Well, that's not really clear to me because I'm a word person and not a numbers person.
Mm-hmm.
If you are not being recertified, if it's just in the middle of the year, and you get a health cost like $4,000,
Mm-hmm. Mm-hmm.
if you tell the local housing authority about this, how will it actually affect your rent?
So, yeah, so having an increase in expenses like that, just like having increased childcare expenses in the middle of the year that you didn't have before, would be something that it would be in your interest to let them know as soon as you start having that. Whether or not that moment in time will be before or after they've implemented these HOTMA changes, I wouldn't know for your particular housing authority. But assuming that it is after they've implemented the HOTMA changes, then they're going to say, well, we would have done it this way before HOTMA, but we're now going to treat it no longer as the deduct above 3%, but deduct above 5%. And so that means you'll get less of a deduction. On the other hand, they will also say, but we should also be giving you the increased deduction for being an elderly disabled household of the 525 as opposed to the $400. For some households, that difference in fact evens out, but for many households that have high expenses, it doesn't. And so the biggest difficulty, I think, is going to be people who have the higher expenses. And so as has been the case in the past, I think the most important thing is going to be doing a really good job of documenting what your expenses are. And then if you don't think that they're handling it the right way, I know we've done this workshop before, doing a grievance.
Yep, we'll do that one again. And we are at 4 o'clock, so I just want to give folks the opportunity to go if they need to. Mac, can you stay on a bit longer? We have
Yes,
it.
I can.
Okay, perfect. We have at least 2 more questions, so I'm going to go to Dwayne and then Sue. And then we'll see if Parmi has more too.
Yeah, hi. I think at the beginning you said something about the vouchers. I mean the Section 8 vouchers that through housing. This doesn't apply to them? Is that correct?
No, I didn't say that this wouldn't apply to them, but that my focus of my training was going to be on the federal public housing. But
Okay.
these changes do in fact apply to the Section 8, both the tenant-based voucher program and the project-based voucher program that Parmi asked about before. The Section 8 changes, the changes do apply to Section 8.
Well, what about the inclusionary? Because I'm inclusionary, so I'm kind of like, well, being left out.
Inclusionary is different, and I'd probably need to know more about your specific situation.
Okay.
Because it might be that this is inclusionary under some local policy, but isn't technically under a HUD rule. And
Yeah.
so I need to know more about that. Yeah.
I think we know how to get in touch with you, so
Okay.
I'll try to email you on that. Thank you. I
Okay.
appreciate it.
Sure. Yeah, no problem.
Right. And we're going to be doing this workshop at our convention too, so we'll have another chance to talk about all this. Okay, Sue B is next, and then we'll go.
Okay. Hi, I'm Sue Biazizo from Needham, and I've been on the RAB board and our resident association as well. My biggest concern is that a lot of the HUD regulations or for instance, HOTMA, a lot of the stuff, people are not made aware of it until it's too late. When
Yep.
they're doing their yearly recertifications, and all of a sudden they're finding out that this policy is now in effect. They're not made aware of it beforehand, which causes a lot of anguish. We have seen policies that were okayed back in 2021, and they're actually being utilized now, and people were never made aware of it. And it is very, very frustrating. And with our problem is that our LHA seems to not follow their own policies. But I am one of those, I am willing to push back, to, get them to start realizing that this is stuff that needs to be given to people in plain English, not the HUD way. Put it in bullets, simplify, and in different languages. So
That's absolutely correct. And by the way, the worksheets are available in Spanish. We didn't put them up here today in Spanish, but they can be circulated around in Spanish as well.
Good.
And I know HUD is working on other translations. I agree with you wholeheartedly about the need to make sure that people are briefed on this stuff early so they don't end up making mistakes and have problems. And this may be something where Mass Union may want to push people like Mass Narrow or others to like do trainings about, how do you present this stuff in a resident friendly way? How should this all get rolled out so that people understand and that it isn't a gotcha game? It's sort of like, how do we all work through this stuff? Because, some of the housing authority directors get it too. It's like, oh, we got to do what HUD tells us to do, but we're not sure how to do it right. And they may mess up.
Right. We've got 2 questions in the chat. We'll do those after Sonia and Arlene. Sonia, you're up. You are muted.
Okay, so I am a Section 8 tenant, and in the asset and real property limitations, I see that it says here that most families will not be impacted by the asset limitation rules. And I understand that it's because low-income tenants like myself, we have no assets. So it seems the whole asset and property limitations are for the new tenants of government subsidies that want to be called residents, that have $100,000 or more, that have a recreational boat, and all of that. So I think that perhaps in the future, a workshop for low-income families will be better, because we are impacted by this HOTMA situation, but we don't fit into the category of those that are working, making $80,000 and are living in public housing and have all these assets. So my type of population are not there. So my suggestion would be maybe in the future to have something for low-income families, so we can kind of gear into the needs that we have in terms of this information. Thank you.
Thank you.
Okay, thank you, Sonia. Great ideas. Let's go to Arlene.
Hi, everyone. I have a 2-piece question. Are we obligated to disclose our family member who moved out, their new address, location, and all of that information? Because when you try to take someone off the lease, they want to know where that person is living. They want a bill in their name. They want a lease in their name before they can do anything. So is that their rule that we have to abide by, or not? And the next one is, when they're doing the recertification, they would ask you for your W-2 from the year before, your tax return from the year before, 6 months bank records, 6 months full bank records, and 2 months pay stubs. So is that all legitimate things that they asking us for?
Okay, so Arlene, I know you're probably not going to like my answer.
I deal with everyone, not just mixed finance.
No, I realize that. So on the first thing, yes, they can ask you for verification about where a household member
Mhm.
has moved to. On the other hand, if you've basically done everything you possibly can to try to get that information and you just don't have anything more that you can give them, that's what you say. So you say, here's what I tried to do. It's like, let's assume that you have an adult child that moves out and they move to another part of the country and you have not a clue where they have moved with their significant other. And you say, here's what I tried to do to get that stuff. And I swear to you that they don't live here. And if they did, I swear on a stack of Bibles that I'd let you know right away if that happened. Yes, that's acceptable sometimes, as long as you show what you've tried to do, and it looks like you've tried to exhaust reasonable efforts to find where that person is. On the second thing, you've identified a huge problem that exists, particularly in mixed finance developments, but among different housing authorities as well. And I don't think HOTMA has improved that situation. I think actually HOTMA has probably made that situation worse. We will have to see, because HUD may come up with some sub-regulatory guidance that says X, Y, or Z is unreasonable, but they tend to allow this sort of collection of information like the W-2s, like the wage stubs, et cetera, to try to get at what the projected income is. And they tend to defer a lot to places. And as I know we've talked about before, sometimes these private management companies have auditors who are used to doing tax credit stuff or home stuff or things like that. And then the auditors get in the business and tell everybody what they need to do. And then that's what they do. And so you never get anybody who talks to you and has a real conversation about anything. I'm sorry, my answer to that is that. I wish I had a better answer for you.
Thank you.
So next one I want to take from the chat, this is Chris M. And I think this applies to other people too, but as a Section 8 voucher holder, what are the tips for how to influence the housing authority on their HOTMA decisions?
Okay, sure. Yeah. So I do work with Section 8 voucher holders, and it's more complicated for Section 8 voucher holders because of the problem that a Section 8 voucher holder might end up paying more than 30% of their income for rent because the place that they're renting at is renting it above the payment standard or is increasing the rent above the payment standard. And the other problem is that for Section 8 tenants, they don't have resident councils or LTOs like you do in public housing, although some of you have done good work about trying to, if your developments get converted, to keep having resident councils and recognition through that process. But Section 8 tenants can participate in the resident advisory board. Section 8 tenants should be getting notified if there are public hearings happening through the PHA plan. And Section 8 tenants should have an opportunity to comment on admin plan changes. And it may be, depending on where it is that you are, there may be some good collaborations you can do with fellow public housing tenants who are concerned about similar issues that you may have as a Section 8 voucher tenant. Beyond that, I probably would need to know more specifics, and there might be a particular strategy that would work well for you, depending on where you are in the state and what your housing provider is.
Okay, we have a question on move to work. Are those vouchers affected as well?
Yes. So the housing authorities that are approved by HUD for the Moving to Work program, which is not that many housing authorities, but you know, places like Cambridge Housing Authority is a Moving to Work. The Executive Office of Housing and Livable Communities, its whole Section 8 program is moving to work. Medford Housing Authority is moving to work. Watertown Housing Authority just got approved to be moving to work, and there are a few others. But yes, they generally do have to follow HOTMA rules. As with any moving to work housing authority, there may be some specific waivers that they got from HUD about policies. And so for each one of them, you'd have to sort of parse through how did those waivers interact with HOTMA rules? And beyond that, I won't say more because I'll get myself in trouble.
Fair enough. Okay, so last question is going to go to Parmi, and then we'll wrap up.
Okay. First of all, what is moving to work?
Sure, I can answer that one, but it sounded like that was just a first question. So why don't you give me all your questions?
That wasn't my question at all.
Yeah,
You just
okay.
said it, and I'd never heard of the term before.
Okay, so moving to work is something where Congress has given housing authorities the ability to ask to be not have all the federal rules apply to them. And so they have given that status to a number of housing authorities across the country. You have to apply for it. You have to meet HUD criteria. Boston Housing Authority does not have moving to work status. They did try to get it, but they didn't get it.
But what does it mean?
It's
Moving
just
to work.
It's just a name. It doesn't really mean anything. It just means we've been given freedom by HUD to not apply all its regulations.
Okay. It sounded like you could move to go to work somewhere. I didn't
No,
quite
I
get
know
that.
it's one of those snazzy titles that unfortunately it's like the Quality Housing and Work Responsibility Act. It's like it doesn't really mean anything.
Mhm. Is that like the Section 8, you can move out of state with your certificate?
No.
Well,
No, that's different.
no.
Okay.
Yeah, I mean, that is true with the Section 8 program, but moving to work has nothing to do with that. Yeah.
So what's
Okay.
your question, Parmi? What's
My question,
Yeah.
my question deals with the changes that they evaluate your medical expenses with. Last year, I was told I was supposed to use IRS rules for medical deductions. And I said, but I don't work. I don't file income tax. So why am I being subjected? And it was obvious that it cuts a lot of things that would allow me to get more deductions. But I didn't have any avenue of which to debate that from. This is very helpful here. I got to plug my plug in. I see my screen getting dark. So this year, I'm not sure what it is. And I sent you a separate note too, if I could talk to you about that. But they change when they took over. My research date was December 31st in December. And it has crept up and crept up and crept up because if I interfere or have questions, they change my research, what's it called? The effective date of certification. Now it's in May. Before it was December, then it moved up, and then it was April. Now it's in May. And it's because if I question the rent change, it's been since February to get a meeting to get this settled. And meanwhile, that date changes, and I don't know what that means for me.
Okay, I don't think at this point I could get into individual issues on that, but what you talked about the change date does sound weird. And so,
Yeah.
but I think I think one would need to get into your circumstances a little bit more than we can right here on this
All right, that's
webinar.
fine. I understand. I thought that it was a policy thing or something that they can keep doing this.
Yeah,
I
no,
just didn't know.
it makes no sense.
And the
that they should be
IRS
changing it.
thing, they sent me a letter, not a letter, but a photo stat of IRS medical deduction rules and said that HUD uses these now. HUD doesn't use the other things.
That is correct. So what they
Army-
said about using the IRS guidelines is correct. Yeah.
Army, we want to talk to you
Okay.
here at Mass Union, so give us a call, okay, and we can talk about this more, okay? You got our number
Mhm.
right? All right, great. Okay, so Annette put a nice thank you to Mac in the chat. Mac is my HOTMA or hot pop. Oh, I get it.
As
Hero.
long as I'm not hot papa. There you go.
So thank you, Annette, for that, and to all of you for sticking with us for this long time. And really, thank you so much, Mac. This is so much great information. And we will be posting this to our website, and you'll all get the slides in a follow-up email from Lilith. Thank you for being here, right? Am I forgetting anything, Maria? You go.
Nope. And in addition to the additional resources, you'll also get the evaluation link, because if there's more resources that you need from us, we want to be able to capture that.
Yes, yes, yes.
Mhm.
Thank you very much.
Thank you all.
Thank you all.
Thank you.
Happy Thursday, everybody.
Yes.